Hi everyone, my name is Thomas Veillet and I'm what's known as a financial columnist. I've been working in finance for 35 years. I'm a former trader and my goal today is to make finance more accessible so it's less overwhelming than usual. And today we're going to talk about what's going to happen in 2026. 2026 is approaching, and if you're wondering what the markets still have left in them, you're not the only one. Investors around the world are already turning their attention to next year with a pretty simple question. What should I expect from the stock market, interest rates, commodities, and the rest of this geopolitical circus? So get comfortable. We're going to look at this together calmly, without any fuss and without any wild predictions, of course. First of all, stocks. For stocks, 2026 is a year of hope, but still with your seatbelt fastened and a lot of caution. As you've seen in recent months, the markets have been like a roller coaster. And the real question is whether 2026 will be an upward ride, a downward ride, an up and down, or just a long straight line that bends from time to time, but still goes up overall. I'm not going to lie to you, it's never easy to make precise forecasts. Generally, we tend to make rough outlines instead. The simple truth is that overall companies remain solid. Profits should continue to grow, but not as quickly as in 2024 to 2025. Valuations, especially in tech and artificial intelligence, are very high and sometimes too high by usual standards. So be cautious on that front. Does that mean there's going to be a crash? Most likely no. Does that mean we should be cautious? Yes, a little. In 2026, you can mainly expect a market that moves forward but with a slight limp. Why? Well, because it all depends on interest rates, global growth, and whether artificial intelligence can live up to its promises without collapsing like an overly ambitious souffle. In short, the stock market should remain positive in 2026. Especially since interest rates are expected to keep falling. But there will probably be more bumps in the road than fireworks. The market is euphoric, it has doubts, and when it doubts, it tends to become volatile. And sensible sectors like healthcare, basic consumer goods, and defensive sectors in general could perform better than the current stars. Point number 2 is interest rates, the big return to something a bit more normal. If you want to understand the reactions we might see in 2026, you'll need to watch interest rates closely. For the past 2 years, central banks have been juggling between lowering rates a bit and waiting a bit longer. Powell, Lagarde, and their friends are like drivers hesitating between shifting into third gear or staying in second. They are all dependent on upcoming economic figures, and as we've seen over the past 2 years, Western central banks tend to move toward a general decrease in interest rates. And as long as that's the case, it provides support to the financial market. In 2026, the general idea is simple. Rates should continue to come down gently, slowly, very slowly, too slowly for some, and maybe not enough for others. So why does all this matter? Well, because interest rates are what create gravity in the markets. When they go down, stocks can breathe. When they go up, it becomes harder to breathe. It's exactly like being in the mountains. What we're expecting are measured rate cuts spread out over the year and inflation finally returning to its acceptable range around 2%. That's already the case in Europe, and we hope to get there soon in the United States. And so a somewhat more stable environment for investing. But be careful, that doesn't mean things will become completely predictable. Central banks will remain highly sensitive to anything that moves, growth, geopolitics, oil, employment, and any exogenous shock that could occur. Point 3 is commodities, a return to earth, but not at all underground as one might expect. 2024 and 2025 have been years full of tension, oil fluctuating with crises and wars, metals under pressure because of AI and electric cars, and gas going up and down depending on the geopolitical mood. In 2026, you can expect things to be a bit calmer. At least that's the hope. Oil, for its part, should stabilize. So why should it stabilize? Mainly because Saudi Arabia, the United States, Iran, and all the others have realized that no one benefits from oil being too expensive or too cheap. We're in a range, let's say $60 to $90, that's likely to become the new normal. Then, when it comes to metals like copper, lithium, and nickel, for example, the demand for artificial intelligence, servers, and electric cars remains huge, but it's not unlimited. The spectacular surge should calm down, even though there are still some concerns about rare earths from China, as we saw again at the end of 2025. I would bet more on stabilization with a slight increase, but not the explosion that far too many people are expecting. And then, of course, there's gold, which will remain the market's psychologist. When everyone is doing well, it rests, and when everyone panics, well, people start buying it because they're worried and want reassurance. 2026 should give it a few moments of glory, but nothing that would warrant rewriting War and Peace. On the other hand, The trend should remain upward given the general interest, and especially the interest that central banks have in the yellow metal. Point 4, geopolitics, which is a bit like the elephant in the china shop. If you want to understand the markets in 2026, take a good look at and learn the world map, just like every year, and even more so now that Trump is back. Yes, because the next financial shock could very well come from geopolitics. First of all, in the United States, Trump is back, more unpredictable than ever. We've seen it this year, and it looks like it's going to continue. Between his tariffs, his threats against the Fed, and his rodeo-style diplomacy, every statement he makes can move the markets. And let's not forget that the head of the Fed, Jerome Powell, will be retiring in 2026. So 2026 will be the year when the world will have to get used to Trump 2.0 style and realize that we're in for another 2 years of it. On the Chinese side, the Chinese economy is still struggling. The real estate market remains fragile, but Beijing is keeping its cool and continues to support its economy with bailout plans. Plans that will almost certainly end up working. Technological leadership remains an obsession, and the rivalry with the United States is not about to disappear. The US continues to prevent Nvidia from selling in China, but even Nvidia's CEO thinks China is not far behind anymore. China could surprise us, so don't count Xi Jinping out too soon. As usual in the Middle East, there's always a point of tension. If everything is calm, the markets breathe easier, but if things flare up, there will inevitably be pressure on oil prices, which could spike and thus also create inflationary tensions. It's as simple as that. We'll probably be talking about it again in 2026, just as we do every year since I started in this profession. The major stakes for 2026 are high, and above all, there are 3 of them. Behind all the numbers, there are 3 real questions for the year. First question, will growth hold up? That is clearly the main question. We've seen in recent years that the indices have risen on expectations of rate cuts, but also because a handful of tech companies have experienced explosive growth and now represent a third of the market. In 2025, growth skyrocketed thanks to artificial intelligence and because the world's major tech companies invested $400 billion in the development and creation of artificial intelligence and data centers. In 2026, we're talking about $520 billion, but the question is when these investments will start to pay off. For now, the United States remains solid, but the numbers show signs of slowing down, whether in terms of employment or economic growth. Europe is struggling as always. China is injecting funds, providing support, and hoping to restart the growth engine. So 2026 will either be marked by economic recovery or it won't. Second question, is AI a bubble or a lasting revolution? The markets are betting heavily on artificial intelligence, maybe too much. 2026 could be the year of reckoning, with real winners emerging from the illusions. So caution is advised in this sector, and be wary of any sign of waning interest. At the end of 2025, skeptical comments about artificial intelligence are becoming more insistent, and the sector should not be overweighted in 2026. Third question, will central banks manage a soft landing? This is the central issue, as the saying goes. The Fed still needs to cut rates to boost the economy, but without reigniting inflation. For now, things seem to be moving in the right direction. The Fed has stopped shrinking its balance sheet and is already preparing to support the economy if needed. In Europe, rates are low, growth is sluggish, and there are questions about how to revive growth while also dealing with Donald Trump's tariffs. In summary, if central banks manage things well, growth will pick up again, inflation will be kept under control, and markets will remain stable. On the other hand, if they mess up, brace yourself for turbulence. In conclusion, 2026 is a year of normalization, but with surprises. In summary, 2026 shouldn't be an euphoric year, nor a disastrous one. It will be a year of normalization, of gradual recovery, but there could be moments when things really get shaken up. So if you're investing in 2026, keep this in mind. It's not the year to do just anything, but it's also not the year to be afraid. Stay diversified, stay calm, stay curious, don't panic if the market panics, and listen to Warren Buffett when he says, I'll tell you how to get rich, close the doors, be fearful when others are greedy, and be greedy when others are fearful. That's it. If you enjoyed this video, don't hesitate to subscribe to the channel, like, comment, share, and we'll see each other again very soon.